Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the man, myth, the legend, Mr. Dan Bird. How you doing, sir?
I'm doing pretty well. How are you?
Awesome. I'm doing great, man. So we're going to talk about Max Payne. Why don't you kind of first define it simply for someone who may not understand that term in regards to stocks and charts and the like, and then we'll dive in. Floor is yours.
Yeah, before we do that,
Okay.
I forgot to ask you on the last session, but
Sure.
a week from today is Christmas.
Okay. Yep.
What are we going to do?
I'm going to take
Christmas,
it off.
Christmas and New Year's.
It probably will take them off. Yeah. I don't know
Okay.
about New Year's actually, but I'm going to certainly take Christmas off.
Okay. I mean, I'd be willing to do it Saturday if you wanted to.
Yeah, yeah, you know what? I'll see if I can make that happen. I'll send you a
I
note.
probably won't be around on Sunday either. So
Yeah, not around.
yeah.
So happy holidays, folks. All right, so do me a favor, define Max Payne one more time. Or
All right. Let me show my newsletter real quick
okay,
for those that didn't see it last time. This is just I do research on
you're not sharing,
Saturdays.
or at least
Oh,
I'm not seeing.
no, I'm not sharing. You're right. Okay, so I do research for my own purposes, and then I share it with friends and family, and now folks on Zuber's channel. If you're interested, just send me an email to breakpointtrading@gmail.com, and I'll add you to the list. And if you want to be taken off, just let me know, and I'll take you off.
Sounds
The
good.
last session that we did, we talked about this chart down here, which is I thought was a really interesting chart about secular bull and bear markets.
Hmm.
If you didn't see the last session, I'd encourage you to go back and watch it. But on this session, we are going to talk about Max Payne.
Yep.
And what is Max Payne? So Max Payne actually is one of the platforms that I subscribe to is Earnings Beats.
Hmm.
And Earnings Beats is a site that's run by Tom Bowley. He
Okay.
is a contributor to Stock Charts. He's a technical analyst. He used to be a CPA. He used to do financials for big companies, and he would do their quarterly reports, and he knows how to read quarterly reports.
Hmm.
And he realized that most of what you see in a quarterly report is looking in the rearview mirror.
Yeah.
He wanted to have a better way of understanding where companies were going,
Mm.
and that's when he discovered technical analysis
Okay.
to try to figure out where they're headed. And he puts a lot into this. I mean, I get a lot out of it as a subscriber. It's
Hmm.
kind of an expensive subscription, so I wouldn't necessarily recommend it for everybody. But the things that he offers are, you know, pretty interesting. And he actually puts together some lists that will show um, strong earnings, things like that.
Hmm.
But one of the things that he does, there's chart lists here. So he has, strong earnings chart list, 435 companies that have beaten Wall Street consensus estimates for both revenues and earnings, are liquid and have solid technical charts. So he looks at all of these and he only puts the ones in here that meet this criteria.
Hmm.
And he does this every quarter whenever earnings come out. So strong earnings is 435. Here is accumulation distribution. Here's a short squeeze, which is interesting. So companies that have more than 20% float that is short.
Oh wow.
Strong earnings, strong future earnings. So belong to strong industry groups, not already on the strong earnings chart list. In a sense, these are companies currently favored by Wall Street, suggesting that perhaps we'll see better than expected quarterly revenues. And then there's a raised guidance chart list. 308 companies that have raised guidance. Now, other than the strong future earnings, there could be overlaps in the ones that are in the strong earnings and the ones that are in raised guidance. There could be similar companies in both.
Mm.
So what I've done is I've combined all three of those categories: future earnings, raised guidance, and strong current earnings. And I've created my own because you can actually create your own lists out of this. The way that he
Sure.
does it is he gives you a password, and you can go right, if you have a Stock Charts account, which I do, you can go right into Stock Charts and you can get the whole list.
Mm.
So this is the raised guidance list. And then I just save it to my own chart list. chart number 104, raised guidance. And now I can do anything I want with all the research that he's already done.
Nice.
One of the things that I do is I combine all three of those lists together. So I basically get the best of the best.
Got it.
But one of the things he does every month when options expire, and options expired on Friday, which is one of the reasons I'm using this topic, is something called Max Payne. So Max Payne is basically the balance. Think of it as a seesaw. You've got calls and puts, right? So puts are people that are counting that the stock is going down. Calls think that the stock is going up. So you've got a number of people buying calls and a number of people buying puts. Depending on which one is heavier, which one is, has more activity, will determine which way it should go. Okay. But there's a point of equilibrium that will indicate where those balance each other out. And that point of equilibrium will tell you whether the stock or the market is likely to go higher or likely to go lower. And that's Max Payne.
Got it.
So what he does is he goes to the cboe.com website and he downloads all of the puts and the calls for all of these stocks right here, including the SPY and the triple Qs. And he runs it through his spreadsheet, and he actually gives you the spreadsheet. So you could do it for any stock if you wanted to. He runs it through the spreadsheet and he identifies where the equilibrium point for these will be. Now, it doesn't mean it's going to get to that point, but it gives you a sense for the direction that the market might be headed. Okay. One of the things that I've noticed, and he has actually said, is that it is kind of the opposite of what the market's doing. And I mentioned this in my newsletter. The market before last week was generally headed higher.
Okay. Yep.
Okay. Last week was options expiration. So because the market's headed higher, now remember, you have market makers out here that have to make a market, that have to create that equilibrium. So if you've got more people that are short Netflix, for instance, then the market makers have to buy Netflix in order to satisfy those shorts.
Sure.
All right. So the market makers are on the opposite side of the trade. And that means if Netflix has a lot of call volume, so the close on 12/9 was $320. Netflix had been going up for 2 weeks before that, right? In fact, Netflix was down around $260 before they had their run up to 320. So all of the traders out there were buying calls on Netflix. Okay. Well, that meant that the market makers had to buy puts. They had to buy the other side of that trade. Okay. Which means that they had to spend a lot of money, and they're hired by Netflix to make a market. All right. So they had to buy puts to offset the calls. Well, in order for them to not have to lose money, to make sure that they keep all that money, the best thing that could happen is that Netflix went down before options expiration. Okay. You follow that?
I do.
Means that market makers would not have to pay out all of those call options. So a bunch of people had calls, up to $320.
Yeah, they were in the money.
They were in the money. They're in the money calls for Netflix. The market makers want Netflix to go down so they don't have to pay on those calls. Those calls essentially would expire worthless. Yep. And the market makers would be off the hook. They wouldn't have to pay. Okay. Now, the market makers are not going to lose money, no matter what. Right. And they're going to take the other side of the trade. The week after that, they're going to do the opposite again. So they're going to buy Netflix next week, or they'll sell more in the beginning of the week and then buy it later. They're not going to get hurt no matter what they do. But this is the way that they operate. And that's what Max Payne is all about. It's trying to find that equilibrium point where the puts and the calls are equal. Okay? Yeah. So Max Payne, according to Tom Bowley and all of this research that he did, the price was $320 on 12/9. 1 week later, options expiration, Max Payne implies that it should be at 285. That's
Yeah.
the point
So that
where
probably acts like a magnet pulling it back.
it's like a magnet, right? It's like a seesaw trying to get to the
Mhm.
middle.
Yep.
All right.
I get it.
Trying to balance it. So Netflix 285.
Yeah. I have no idea where it finished.
Here's Netflix. It finished
Ah,
at
280, 288.
290.
Oh,
290.
290.
The low
Where is
was
it?
the low was 288.
Oh, okay. There it is.
It
290.
closed at
Yeah.
290, but that low is important because
Yeah. That's a 30% move. Or I'm
that's
sorry, a
right.
10% move, 10% move, $30 move.
That's right.
Yeah.
$30, 11%, 285, 10% to 290.
Yeah, 290.
But that gives you a sense for how powerful this Max Payne thing.
Can you do me a favor and look at PDD, which is a 21 there?
PD right here. So
yeah,
it's at $89 on 12.9. Max Payne implied that the equilibrium point would be 71.
And I have no idea what
now remember,
PDD is.
remember, it's important to understand with this is that this is not predicting that that's the price it's going to go to.
No, not at all.
This is just implying. You can see right here a minus 21. Yeah. That has a very high likelihood that it's going to trend lower.
Right.
Okay.
But there could be market news that doesn't make that happen. I have no idea what company that is. I don't know what PDD is.
This is Pinduo. It's a Chinese company.
Oh, okay.
$87 is where it ended.
All right. What did it say?
You know, Max Payne wasn't much below the actual where it started. Right. So that one went down a little bit.
Market maker got hurt.
Yeah, they don't get hurt, but they paid out. They had to pay
day.
Out.
Yeah, they had to pay out that day. Yeah.
They had to pay out on those calls. Here's JPM.
Yeah.
All right, Max Payne on JPM is only 4%.
Yeah,
but said 127.
Right.
Let's see what it did. 129.
Yeah, came in a little.
So you can see what the trend looked like.
Yeah.
So if you understand this about options expiration, the one thing to keep in mind about Max Payne, what this really highlights, is that as you go into options expiration week,
I have a question. Is Tesla on that list?
Tesla.
I didn't see it.
Tesla could be on the opposite side.
Oh, there it is, right there. Yes,
Tesla's right at the bottom. So Tesla had been going down.
Right. And it did go down. It ended up at 150.
It went down even more, but because it was going down, Max Payne for the market makers was for it to go up, so they wouldn't have to pay out on those puts.
Right.
Remember, this means that the market makers don't want to pay on the puts.
Right, of course.
So
but it ended up going down, which means they got hurt more.
Which means they got hurt more. That's right.
Yeah, and a lot of that's, again, specific news. Elon Musk sold 3.5 or whatever it was billion dollars in shares.
And you can see Amazon right here. Max Payne was 94. So Max Payne doesn't have to be negative. Actually, Lucid has a big one, 38% from 8 to 12. Let's see what Lucid did. I think it went down to actually 737.
Yeah.
So market makers got hurt on that one also.
Very, very cool. Yeah,
that gives you
a sense. Yeah.
Yeah, that gives you a sense for what Max Payne is all about.
Yep.
It's again, you have to be careful because it doesn't predict that that's where it's going to go to. It just gives you a general idea. And what I like to do is look at the Qs and the SPY up here.
Yeah, I was really intrigued by that because those are the most liquid, at least as I know them.
Yeah.
Tickers, and to see that was so well balanced going in.
Right.
Yeah, that was interesting.
Yeah, and I don't know what the Q ended at. I think it went down to.
Probably.
Q ended at 274. You know, Max Payne was 280, but the trend was down, and it did go down.
Yep.
And that's what I look at in this. You know, and actually it gets to the point now where I don't even have to look at this report anymore. Yep. I just kind of have a sense if the market had been going up the week before options, then probably is going to go down just before that options expiration Friday.
And these are quarterly, right? Options are quarterly?
Options actually are monthly.
Oh, monthly. Okay, monthly. All right.
But the big ones are quarterly. That's when you get triple witching.
Triple and quadruple. Okay, cool. Very cool.
That's when options, stock options, as well as futures all come due at the end of the quarter.
Got it.
One couple of other things that I wanted to share with your audience is some shortcuts and some ways to use some of the platforms that I use, like stock charts, for instance. So stock charts is a great platform for doing technical analysis.
Okay.
And you can just put in, let's put in Amazon just for fun.
Sure.
And you can set up these charts any way that you want them. And then if you want a different way to look at it, so this one right here is my default chart. This is my default and how I want to look at it. But I have one set up for weekly, 5-year weekly. So if I want to look at a longer view, what has it been doing over the 5-year period? I just set up a different chart with weeklies and longer term and all the different indicators that I want to put in there. And then I just go down here and I say add new or replace. So this one I already have in there. So I can say replace this one, weekly 5-year. And now this becomes my weekly chart. Or I can add a new one if it's a brand new one. Add it in there. And now I got a quick link over here that will just link me to that chart.
Nice.
All right. And I've got one in here for what we talked about last week. This is what I call simple. This is just the kind of the beginners
where people start
analysis, RSI and MACD. One thing that I didn't mention last week that should also be on your first chart is the volume down below. I left that out last week, but it's good to put volume in there as well. And then I put a moving average line. In this case, it's the 21-day moving average to see if volume is higher or lower than the average. So when the price goes down and volume is down, it's actually a good thing. It might be setting up to start going higher. But if the price is going down and volume is going higher, that's not a good thing. All right. But that's one of the shortcuts in here.
Nice.
The other shortcut that you can use is there are ways to create scans. And what I do is I save a lot of the things that I do to my browser, my favorites list. So, once I create something, I save it to my favorites list. So here's my VIX chart, so I can very quickly get to it. But I have scans in here too. So if I want to do a scan, for instance, on short squeeze or the bullish trifecta, this is all of the best earnings beats charts. So there's 42 that bubble to the top, strong earnings chart list, etc. But then what I do is I created a chart list that I call scan dump. It's just an empty list.
Right.
So anytime I want to manipulate a scan that I've done, I just dump all of those charts, there's 42 of them in that case, into this chart list called scan dump. And that becomes my temporary folder. Where I can just work on things. Now I can do things like, let's say, which ones are moving the most. So this one here, Tusk Energy, moved the most on Friday. Or if I want to see the chart book, if I want to see each one individually and I can just skip through them, I can just move through each of the charts one by one to see what they look like. But the way I do that is I create a list called scan dump, and that just becomes a temporary list.
Got it.
That I just dump things into. So if anyone's out there using stock charts, I highly recommend doing that. Just set one up. I try to name it so that it ends up at the top of my list or near the top.
Right.
So this was the third one down. So it's very easy and quick for me to just jump to it. And then the last thing I'll show is in VectorVest. And VectorVest is what I recommend for folks that are brand new, just getting started, because it can keep you out of a lot of trouble if you do nothing more than just follow its market timing graphs here. You can see that VectorVest gave a confirmed down signal on Thursday.
Wow. Okay.
That's rare. That's the slowest moving, most conservative signal that they have. And it will show you, number of sells, number of buys, advancers, decliners, etc. And then you can go into the graphs and actually look at the graph of the market timing. And you can see here that it actually shows you right there where it gave the down signal right there. So there's an up signal back here. There's a down signal back here. You can see how long the down signals last for typically. Right there. So that is not a trivial matter that it gave a down signal right there. So this is the one that if I were starting out, I probably would start with VectorVest.
Okay.
You can use stock charts for free, but you don't get a lot of the additional features that I use. But you can certainly create charts and look at charts in stock charts. Either one of those, by the way, if anyone signs up and uses me as a reference, I get an extra month.
Oh, you get months. How would they reference you?
With my email, which is in my which is in the newsletter.
Okay.
Actually, I'm going to show the newsletter, but this is not the email to use. So to sign up for the newsletter, just send me a note to breakpointtrading@gmail.com.
Sure.
But to use me as a reference, use my email that you get my newsletter from. So you will receive a newsletter from me under my normal email, which is danbird@comcast.net.
There you go.
That's the one that I've signed up with in both of those sites. That's the one that they will recognize me as.
Oh, and get you a free month of service.
I get 1 free month. I mean, that's
it's nice.
Not really the reason I'm pushing it.
No, it's just a nice thing. That's all.
Yeah, it's a nice thing to get. And by the way, if anyone sends me a note to sign up and then for some reason they don't think that they're getting the newsletter, because I usually send it out within a day of you sending me a note. If you're not getting it, it's probably in your spam folder, and it's probably under the danbird@comcast.net email.
Yeah, exactly.
It's not under the Breakpoint Trading.
Okay. Very cool.
I use this one just to, keep a lot of
to catch all. Yeah,
it's a catch-all email address. Right. Exactly.
Very, very cool, Dan. Well, thank you very much for being a part of this. I want to wish you and your family a happy and Merry Christmas. I appreciate all you do. Take care.
And if you want to do it on Saturday, I could probably do that next week, but I won't be able to do Sunday.
Yeah, no, Sunday's definitely off. Not a problem. I will, I'll see you Saturday. We're actually picking up our daughter Saturday, so I'm not sure, but I'll let you know.
Okay, sounds good.
Thanks. Bye.